Hello, guys. Good day, and you are welcome back. In this episode, we are going to look at the beginning of our technical analysis. Yes, before I dive into what I have on the screen, or before I dive into explaining what we have on the screen, I want you to spend a second to like this video, and then also if you are new on the channel, make sure you subscribe and then you turn on the notification bell icon. And then once again, if you have questions to any thing we are going to discuss in this video, you put your questions and comments in the comment section. Okay. And then also one more thing, make sure you come back all the time, or make sure you join us in our Forex trading masterclass. Yes, if you want to join us for the month of August, we leave your comment in the comment section. Yeah, leave your comment in the comment section. I'll give you a link to join in August. For July, we have already started and we are progressing gradually into the studies. All right, so what I have on the screen is what we call anatomy of a candlestick. Kindly pay close attention to this explanation, anatomy of a candlestick. Now you realize that on the forex market, or on the forex chart, you are going to see most often you're going to see this candlestick, this green and red candlesticks. I'll give you detailed explanations of it all. So if you want to become a technical analyst, or if you want to analyze the market or the forex market very well, you want to analyze it as a pro, then you need to understand the language of the market. The language of the market is the candlesticks. Some others use line chart, others use graph, which I'll go to the market to show you some of these things I'm talking about. All right, so let's progress into the study. Now what you see on the screen is called the part of the candlestick, or the anatomy of the candlestick. So we have two types of candlesticks, which is the bullish candle and the bearish candle. So you see up here I have bullish candle and then bearish candle. Now what does a bullish candle stands for, and what does a bearish candle stands for? Now you know, in every market there are two groups of people. There are those who are in the market to buy something, and those who are in the market to sell something. All right, so the bullish candle represents the buyers in the forex market. It represents what? The buyers in the forex market. And the bearish candle represents what? The sellers in the market. Okay, the sellers in the market. Now these buyers are called bulls. We often use the word bulls. When you hear of bulls in the market, or as a forex trader, from any trader, the person is just letting you know bulls are buyers and bears are what? Sellers, just as the names bullish candle and bearish candle suggest. Now the colors does not really matter. Okay, the colors are just color codes. That's the most popular color codes that are used in the forex market. That's the green and the red, but you can choose white to represent buyers, and you can choose black to represent sellers, depending on the color codes that fits you. But the widely used color codes are the green and the red. That is why I'm using this. You can make those changes on your charts. Yeah, you can make those changes on your chart. All right, so let's progress into the study. So the part of the candlesticks. Okay, so the first part of the candlestick is the real body. Okay, that's the real body. All this you are seeing is the real body of the candle. Okay, is the real body of the candle. Then we have some thin lines up and below the candle. Some thin lines up and below the candle. Now these thin lines are called wick. That is WEAK, wick, or shadows. It was not captured in this part, but the name is wick or shadow. So you must take note of that. All right, so let's take it for the bullish candle. For the bullish candle, Now the candle always has an opening price here. It has an open price, and then it has a closing price. So the candle opens at a lower price and then closes at a higher price. So always when the closing price is above the opening price, we say the candle is a bullish candle, meaning that the buyers were able to move the price of whatever you are trading up. Okay, the bulls were able to move the price up. Now what about this lower wick and upper wick? Now the lower wick represents how sellers push the price, or the lowest the price got to, the lowest price that got to within a specific time frame. So for example, if you are taking a daily time frame, for instance, if the candle, it means the candle opened here and then it went, the price went all the way low to this point, and then also buyers push the price all the way up to this point, then the price dropped a little and then the candle closed here. So if we are taking this for a daily candle, then means that at 11:59 p.m. the candle closed at this price. So with a bull candle, always the closing price is above the opening price. The closing price is always above the opening price. All right, so take note of that. Now, okay, so we have the upper wick and the lower wick, which is captured here. Okay, so the 10 lines you are seeing below are the lower wick, and then those up are the upper wicks. All right, now let's do that for the bearish candle. Now the bearish candle also has the lowest, or the lowest price got to, that is the bottom of the wick, that's the lowest price got to, and then the top of the wick, upper wick, is the highest price got to within a specific time. So we are using a daily time frame. So within the day, that is the highest the price has gotten to. All right, that is the highest price has gotten to. So one key thing about the bearish candle is that the bearish candle always has the opening price above the closing price. So it means the price opened at a higher price, but later the sellers push the price all the way down and then it closed below the opening price. So one key difference between the bullish candle and the bearish candle is the closing and the opening price. So you realize with the bullish candle, the closing price is always above the opening price, and then with the bearish candle, the opening with the bull candle, the opening price is below the closing price, or the closing price is above the opening price. And when it comes to the bearish candle, the closing price is always below the opening price. Means the price opened higher, and because there were more sellers in the market, they pushed the price down, and then it closed below the opening price. So you must take note of these. You must actually take note of this, that the opening price and the closing price for both the bull candle and then the bearish candle are different. Now let's get to the chart. Let's go to our MT5 app and then we look at a practical example of what we are talking about. We want to look at the practical example of what we are talking about. So for instance, this is the Euro USD. This is the Euro USD market. All right, so each candle here represent a specific time frame. Okay, each candle here represent a specific time frame. So for instance, this is where to change the time. You click on H1. We have M1, M5, M15, which represent 1 minute, 5 minutes, 15 minutes. The H represent hours, so we have 1 hour, 4 hours, and then the D represent daily. We have the daily candle, weekly, and then the monthly. All right, so that is where to change the time frames. Good. So let's do it for a daily time frame. Good. So with the daily time frame, when you select the daily time frame, what it means is that each candlestick you see here represents 1 day. Each candlestick you see here represents 1 day, and each of the candle has a closing price and then an opening price. All right, so for this bullish candle, it means that the price opened here and then it went, this is the lowest price went. Let me use this so we can see it well. So the price opened at this point. This was the opening price, okay? And the price came as low as this point, and then the price went as high as what, this point, and then it dropped a little and then it closed here. So for the bullish candle, always the closing price is above the what, the opening price. So you must take note. Now let's do the same for a bearish candle. Now with this bearish candle, let's look at this bearish candle here. With that bearish candle, we had the what, the opening price here. Price went up a little, that is the highest price went, and then the price dropped as low as this point, okay, as low as this point, and then it came up a little to this point and then it closed. So you realize that the closing price is what, below the what, the opening price. Price opened here and then closed here. That is it for the bearish candle. And I also told you the fact that the color codes, which green represents buyers and red representing sellers, depend on you, the individual. All right, so I can do these changes here. I go to settings and then I go to colors. All right, I go to colors, I click on colors, and then I can change my color for the bull candle. I can make it let me do it brown. Okay, let me do it a little faint brown, and then I'll do my bear candle as what, black. Okay, I'll do my bear candle as black, and then I'll save it. So when I go back to the chart, you see that the colors have what, changed. The colors have changed. So I know that this color represents buyers, that's the bulls, and then this colors, the black, represent what, the sells, that is the bearish. All right, so that depends on you, the kind of color code you want to use. Yeah, so the widely accepted or the widely used color codes are the green, like I told you, are the green for the bull candle, and then what, the red for the bearish candle. All right, so I've done that. So when I go back to the chart, I still have this intact. All right, so that is how to know the part or the anatomy of the candlestick, the anatomy of the candlesticks. All right, so we are back to the anatomy. We have learned the various parts of the candle: the real body, opening price, closing price, the highest price, the lowest price. Then we said these thin lines are called a wick, or it is also called shadow. We have that same for the bearish candle. And we said the only difference between the bullish candle and the bearish candle are the opening and the closing prices, in which the bullish candle has the closing price above the opening price, and the bearish candle has the closing price below the opening price. So thank you so much for your time, and thank you for watching. Leave your questions in the comment section. If you have any question, leave it in the comment section. I'll respond to it as quick as possible. And then if this video is informative to you, kindly strike the like button, and then also you can share to someone who needs this knowledge. Thank you so much. I will see you in my next video.